Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at ticker symbol RIVN. This is Rivian. I've done a few videos on Rivian in the past. Essentially, they are losing more than they're making, and that is still the story today. The margins are getting better, but the stock has had a resurgency due to the investment from Volkswagen. I believe it was $5 billion. And we're just gonna see Volkswagen. Rivian denies production plans with Volkswagen. Um, Not really sure what that's about, but yeah, 5 billion. Rivian stock about 5 billion Volkswagen investment. So, uh, what does that mean? Well, it gives Rivian breathing room to continue to expand production, gain consumer trust. Um, it allows them to really keep breathing and going on and uh, remaining competitive. I don't know if competitive is the right word at the moment. Tesla has them beat on margins. They're still figuring it out, but I think if they can continue to exist, which based on this $5 billion lifeline, I think they will make it. And that's why I actually invested in this company. I didn't invest much. I have less than 100 shares, but I'm up nicely. And it was essentially, if you watch my last video, is the company going to be around for another 2, 3 years? I thought, heck yes. I mean, they're continuing to get more efficient. And then this really bolstered them. And so let's go ahead and jump into the stock and stop talking about my personal bias. Okay, so you can see this stock was at the bottom of the barrel, scraping the sediment off of the bottom of the casing, literally just deepest of the deep of oceans. Money flow up, momentum now up, strength again at the very lowest, deepest part of the canyon, climbing its way up strength wise. And what does that look like on the chart? Let's do a couple things. It looks like this. A nice little hook and a hook. And it looks like the next area of resistance for Rivian stock is going to be around 20 to $21. And what I could see happening from there uh, would be another U-shaped dip, and it would be essentially an inverse head and shoulders. Left shoulder here, the head is the deepest part of the pattern. Come up here and then do another little dip-de-doo, and let's where could we see this potential dip-de-doo come back down? Right there. So this is, well, last month it would have been considered great resistance. Look at this candle. It could not close above it. However, July had bigger, better plans in store for the stock and the shareholders. It closed above it and it's actually staying above, and momentum and strength are saying, let's go, buddy. They've got their hands held and they're going straight for 2021. Not the year. They're going for $20 and $21. My brain. Okay, it does not make sense to run my calculation here because look, they are losing more than they're producing. That means their gross margins are negative. They are negative 100% profit. Not good. But we will look at the other things here. Number one, I do want to call out that everyone can see this potential turnaround. You know, you see it going dip, big dip, and it's recovering. Does it recover even further? Question mark. I say yes. Looking at the sales here, 2021, it went from 60 million to 1.6 billion to 4.43 billion. And we're going to see what 2024 has in store on a conservative clip. And I'll show you how I get there in a second. Other good things to note, quick ratio is a 3.55, meaning if they close their doors tomorrow, they could pay off any debts, liabilities, notes, what have you. Anything over one is good, three is good. They have cash. Um, Earnings per share, I mean, year over year, fantastic. Sales over the past 5 years, amazing. EPS, negative. I mean, look at the last 5 years, pretty disgusting. Gross margins, horrible. Again, they're negatives here. Institutional ownership. Let's go here and let's get this loading. Okay. So old data shows that Rivian institutions and hedge funds own 44%. We're going to see if institutions and hedge funds are buying hand over fist or selling the news. We'll get there in a second. There's quite a bit of shorts here. RIP, they have lost some money over the last 4 months. Okay. So we've looked at that. Let's look at potential 2024 conservative estimates. They had earnings in May, so let's see what they have here for quarterly and revenue. Revenue. Okay. So actually, one thing I do want to call out is what we can see as an observation. First quarter of this year, they did 1.2 billion. Clap, clap, fantastic. That's about double what they did last year. However, notice how their first quarter was weak. It got better, it got even better, and it kind of flatlined out a little bit. It was about 15 plus 7, 23 million. Is that right? 15. Yeah, $22 million shy of what they did last quarter. So if 2024 Q1 is going to be their weaker quarter and then it goes up and up and up, I think we see, let's see, 1.204 times 4, 4.81 billion this year, but I think closer to 5 billion. And the reason I say that is because Q2 was better than Q1, Q3 was better than Q2, and Q4 was kind of flat. So based off that, I think we're getting actually closer to 5 billion. But this 4.43 could be 4.8 to 5 billion, which would again be another notch in the belt going on the positive side of the story, the Rivian story, the turnaround, what have you. In terms of institutional buys and sells, we can see again, well, not again, but sold, got options, sold. No real red flags, although I would love to see the CEO buying down here. Again, the company's doing what it is, the stock. So great resurgence. Institutions own 44.8%. That is old data. New data, SEC forms are included in this calculation, or I'm sorry, included on this website as they're submitted. Ooh, new data, 64.5% institutional ownership. 21% increase from 44 to 64.5. Holy moly. Let's see what people are doing. BlackRock decreased 5%. Price T. Rose Associates sold 50%. Vanguard bought 68 million shares. And if you want to do this yourself, you can go down here and check out all this other stuff. Again, minus down here means they decrease their position. Decrease, added to their position. So you can do all that fun stuff. In terms of price targets, again, I did say $20 to $21, and then I think we come back down and test 13. But really, I think, let's go to Thinkorswim. I think it's going to be a sideways story. Does that even make sense? So basically, let's go from here. I think it's basically going to be trading in this box, which is good. This is accumulation and consolidation phase up until 2027. And again, going from 14 to potentially 36, which is where we have resistance 1, 2, 3, 4, 5 times. I think we could get there. Again, we do our test right here. We get rejected. maybe the right shoulder comes and forms here around $19 and then makes its way up slowly to 30s. It's speculation, but the way this company is going, potential reversal on the EPS and the sales clip, I think personally, we get to 5 billion, and I think this is going to be the story going to, yeah, just basically kind of riding this up for the next 2 years, possibly. Again, and it's not a huge major swing. It's just consolidating in this area for from 2022 to 20. That's a 5-year consolidation in the same range, which will give it this power once it's ready to move out. And that's only if the company can become profitable, have good gross margins. Basically, every car they sell right now, they're losing money. So when they, in the future, this year, next year, whatever, whenever they sell a car, they actually make money. That's gonna be what investors, institutions, and hedge funds look forward to on the next quarterly call. It looks like the next call is gonna be uh, August, potentially August 6th. So that's all I've got for you. If you made it this far, consider subscribing. Let me know your thoughts on Rivian. Give me a thumbs up or thumbs down, and I hope you have a wonderful day.